That's refreshing. Hello friends, I'm Rocky Outcrop. This is Bitcoin Technical Analysis. Thank you so much for joining me. Let's start off here. Where we kind of, if we're looking yesterday and follow up with yesterday's Bitcoin video with more chat about today's price action and where we've come subsequently to looking at the charts. And we're talking about the FOMO coaster. You know, it's like a roller coaster, but it only goes up the way. So the FOMO coaster, and we're talking about how we have this measured move over here. And we're calling this the full fat variety of it, and where this could possibly take us up to. And that was pointing the prices going as high as $11,500. And if we look and see the highs that we actually achieved over there, we can see 11,430. So we got pretty darn close to that. But I think that it leaves a couple of extra interesting question marks on the chart for us about the current sort of dynamic around the prices. So I just wanted to kind of check in here to begin with the chat we had yesterday. Looking over here at the bullish side, obviously things have gone to the bullish direction. You know, we had on the bearish box things like how we had the full measured move of the descending triangle here, which could have taken us up to these regions and then seen a retrace from there. And you know, there was the retest danger of the blue serrated line in there around about 95k, all that sort of stuff. And of course, we can keep an eye on all this chat because this will remain relevant. But the bull box is what we really kind of can check in on. And full measuring stick FOMO goes up to 11.5k, and that's what we just covered there. And that's what we've seen the prices actually come pretty darn close to it. There's a bullish break of the weekly trend there. We've got moves above the 10,500, could precipitate further moves up to the 11k area. And I hope you caught that as well when we were talking about it. A couple of comments down below the video certainly did. They said that we finally got to 10.5k and we're celebrating it at the time. Hopefully then themselves looking at that point for a move up towards the 11k at least area. Pardon me. As you can see, we used the greater than sign here, greater than 11k, and we certainly did actually do that. So well done to everybody who watched yesterday's video and enjoyed the whole FOMO coaster chat. The full fat measured move is still got a ways to go, you know, and so there's still, like, you know, that was what we're talking about there. And the closest we have been since last year to filling the $11,500 CME chart gap. So I'm actually going to check in with that there now, because as you can see, we got pretty close to it here. So you might be interested to see that actually, if this white line here is drawn in accurately, this is the 2-day time frame. Go down to the 24-hour time frame. Scroll over to the left. You can see here, yes, it comes in just at the edge of this gap on the CME charts, maybe a little bit above it actually. If on the daily time frame, just drag it down a little bit. I think I positioned this one. Oh, it's locked. I think I positioned this one with the. I think I positioned this one. Forgot the sentence I was trying to say there. Anyway, regardless, right? It's in there touching it. So maybe I should lock that again. So you can see that actually we haven't managed to fill that. I was watching the price action yesterday in around this area and thinking, will it have the legs to go the rest of the way? And obviously when the prices retracted down the way afterwards and they put in this crazy doji that we're looking at just now in the 24-hour time frame, as you can see, we're really flat here. It's just a line looking at, what is it, 1.7% up apparently. So I was looking here and thinking there's just this little area to go, just this little bit left here before we're in here and then in filling this gap territory, where I was thinking the prices would have a pretty good chance of then at that point retracing if they were to go on the rest of the way up, but didn't actually manage to achieve that. And as far as it went there in the end, only took us up to the previous sort of candle. In fact, the subsequent candle that we put in after the gap here. I've got the police coming by, so maybe it's a good time to have a wee drink of this tea. Excuse me. And they stopped. So yeah, we've come up towards that area, and subsequently then we've actually sunk back down to where we can see there's this crucial area of support and resistance really looking over to the left. Obviously, we're higher than the price action that we've had really for such a long time. We actually have to look back as far as September 2019 for the price action to be in and around these areas. And this is, you know, heady heights up here, and where the price action is now sitting is just above where we previously had a gap as well in the charts, interestingly enough, in this area here. So I'm just going to add a horizontal line on here in this zone for us to keep an eye on as we are looking forward, because actually dropping down there and closing below this area and putting in a red candle today could, see a couple of things potentially happen. And if we did come back down and retrace down the way, then then this line here shows us where we have another gap. So I just revealed this other gap here on the charts. The battle of the gaps, currently, we're a lot closer to filling in this 11,700 area gap that we had on the CME charts. We haven't actually done that yet. Will we see this gap get filled at some point in the future? Well, I dare say we most likely will, and that would actually take the prices all the way down to 9,760. Just getting out of my old measuring stick there and looking at it, well, from the highs that we had all the way down to there would be a 15% move in order to fill that gap up from where we are just now. If you're interested, or around about that fuzzy line down to this area would be sort of 11 or 12% move. And that's fairly significant when we're talking about these big prices as well. Looking at $1,000 being knocked off the prices or more to bring us down to that area. So lots of trading to be done should we actually manage to see the prices, kind of turn a little bit bearish in around this zone, haven't come up so high. So that would be my kind of first sort of warning to people, really. If we were looking for a reason, if we're looking for a reason for just one reason, if you wanted to have a bearish reason on you, you could take this full fat measuring stick the full FOMO one, put it up, and you can see that takes us up just shy of that line as well, just into around about where the price actions come to as well. So that's all very interesting, the way that's all tying together, offering up that 11,500 area as having been a very good area to have shorted it from. If you did indeed, then well done to you. Of course, I'm not a financial advisor, but looking down the way then thereafter, we've already come down 5%. You're pretty solid in a trade in that sense in terms of being able to manage your risk. There's plenty of, you could even retrace all the way up and you'd still be in profit for quite a while before you'd be forced to let that go. So, very, very good. I hope that's encouraging and inspiring to you as we look at the big time frames and take a look at where we could see the prices go into in the face of where, obviously periods that are going to have volatility on the way up there, as we can see here on the charts. Now, there was something I wanted to point out about the structure here as we came up towards the top end, and you'll notice, if you were to have opened up the CMEs at the time, that there was a little gap also on the hourly time frame. So if I just get the rectangle box out here, just in this area, just here, there was a little gap, which you can see was then filled in the following hour after the rise up. So what happens on the CME charts is that they close for a wee while during the day, just 1 hour, and it does open up the chance for these sorts of gaps to emerge. And then the prices came up here, and I was looking at it and saying, well, either we're going to go up here and fill this gap in, it was the battle of the gaps at this point, or the prices could easily retrace from anywhere in here, even at that zone as well, of course, all the way down, and then fill in this hourly gap that's on the charts, before then trying to accomplish that. And that's what we saw happen. So that's the structure of that move up. That's where we had that wick up and down during the price action. That's of course visible on all of the charts just in about that period there. And if you're wondering, obviously a lot of people providing liquidity through their stop losses and stuff like that getting hit in all these areas, and then people who are long in it there maybe providing this sort of wick action in terms of their stop losses. Who knows how that all kind of panned out, but when you look at the CME charts, you can see quite clearly how that could have been something which you could have predicted in a sense at the time. So if you also did that from having looked at how these things work over the course, then good on you, well done, and that's very good. So where does that find us now in terms of the price action? Well, this subsequent high came up and wasn't any higher. This is the 1 hour time frame, and you can see then that corresponds down here with the oscillators down below, showing that the momentum towards the top side didn't actually increase, and we can see that the ADX line has come back down below 40, and the DM positive and negative look like they're coming in for a cross potentially. So if we do see the prices drop back down again, then of course we could be looking towards that sort of gap fill area, which on terms of the regular prices could easily see the prices going down as far as, well, what's the premium at the minute? If it went down to fill the gap, the bottom of the gap's at 9.6, and we're looking at a premium of at least $50. So you could see the spot prices going down as low as 9,600 in order to fill that in before potentially continuing towards the top side. Key areas to look out for as well are just kind of identified by this channel that we have. Moving beyond the middle line, as you can see, is going to be an area where there's going to be some question marks being asked. So that middle line at the minute is coming in there at 11,170 or so. The bottom line on this one's coming in at 10,700. If we were to close below 10,600, I would say, below this previous wick area, then we're looking at that becoming a very real possibility. Perhaps even if this offering us up the idea of a potential neckline in around here, perhaps with a Adam and Eve type structure there on that one, if that comes to pass. So that's what I'd be looking out for. You can do the exact same charting as what I'm doing just there now on one of these other charts, and as you can see, that's already kind of in place, those notions, because we came back down and retested the previous channel area that we had on the bigger time frames on this here. Go up to the 12-hour to show you here, for instance. We came back up, and when we broke above this line, we came back down and retested it. But not only did we retest that parallel channel that's there, we also came down and retested this horizontal line at that 10,500 area, where the previously we'd had this Fibonacci drawn up to in a speculative type sense. So if we put that back in again and look there, the 236 comes in at 10,800. So there, there's your key area for you in terms of this move that we've had towards the top side. Kind of all of the recent bullish story encompassed in this particular, since the sideways section. So it's over here, I think, on the 10th of May, up to the most recent highs. If we then drop down below 10,800, let's call it, then you're looking at a 236 being challenged, and actually then moving on down the way, the three targets towards the downside that you could have while still remaining very bullish on this overall could easily be sort of 10,400, 10,100, and then the 9,700, 9,800 area. And of course, if we did go in and put in a 618 fill on this here, down towards this area, or even turned around at the 786, or indeed at the bottom of this channel, what would all of those things do? Well, they would also fill in this gap here in the CMEs, come down for a retest of symmetrical triangle, giving you a chance to let the oscillators cool off a little bit, for the liquidity to sort of change hands appropriately towards the smart money side of things yet again, and move towards the top side. If that is to be the case, if that happens thereafter, you'd obviously be looking at these crucial areas and saying, well, a breakdown here would be very bearish at that point, from very many different standpoints. Coming in towards the end of the month, so I suppose I might as well just take a quick look at the monthly here and say that, in terms of the candles closing anywhere up here, you're going up to the highs that we've not had since all the way back in 2019. The monthly high then was actually a 12,500 close. Moves above that area are going to be very, very bullish for the overall price structure. But the prices could actually afford to retrace all the way down to all these different areas that we spoke about throughout the show. Looking down here, for instance, looking to the left at where we had the highs in February, you can see the prices going all the way down to that mid 9,000 area, say 9,600, and still managing to put in continuation on this for a potential upward trend on the monthly time frame, starting off, looking at those lows down there at the start of March, and then moving out towards the top side, taking out these previous highs. Of course, that's not me calling for that to happen. This is all about managing your risk. And really, I think what's quite clear about all of this thing is that moving above 11,700 is very good for the prices, and you could look up towards that 12,590 area thereafter in terms of, where you could see the next sort of profit-taking target coming in at. As you can see in terms of the CMEs, everything in terms of the sort of liquidity at that point would dry up, and you'd be looking at that point at being very, very bullish overall, but that's very much getting ahead of ourselves, and that's why then I think putting it all into context, talking about it from this way around makes a hell of a lot more sense. If you've got some value from this video, then please go ahead and hit that like and subscribe button. I really do appreciate it when people do that, and I really do appreciate everybody who's been helping to grow the channel so far. I've got a target of just 57,455 subscribers come next week. I hope we can do it, so be sure to take part in that one. Just going up to 1,200 would be really, really great, actually. That'd be fantastic. Thanks so much for tuning in. Catch you next time.